Good morning, traders. My name is Bennett Tyndall with TradingAnalysis.com, and this is our Elliott Wave Wednesday live stream. Good morning once again, traders. My name is Bennett Tyndall with TradingAnalysis.com. Today is Wednesday, August 5th, 2020. Not July 5th. I apologize for the confusion. Anybody who happened to catch the title before that got edited, but hopefully the scheduled time was accurate. But hey, thank you guys so much for tuning in once again this morning. Always fun to have you guys joining us on Wednesday mornings. Depending on where you're tuning in from, it might not be Wednesday morning, could be afternoon, could be evening. We certainly have people tuning in from all around the world. So traders, as you can see, just to my left, my right, your left, you can see S&P futures up about 0.5% here going into the open. And last week, we mentioned the kind of key theme to be watching over the next couple of weeks was, of course, that of earnings out of big tech. And we've certainly seen a very significant portion of the S&P report. We do have a couple of other names that are reporting this week that we're continuing to watch, as well as track Elliott Wave developments within a few names that are reporting this week. But more importantly, last week was kind of the big week. We've got a couple others that are on deck here. We're going to go ahead and bring over the good old earnings whisperer window here in just a second. But before we do, let's go ahead and bring in the trading analysis team. Good morning, Terry, and good morning, Alex. How are you guys doing, gentlemen?
Good morning, Bennett.
Great.
Good morning, Terry. Good morning, members.
How's everybody doing? Good to see you guys from Singapore, Australia, Poland.
Nice.
Thank you for joining us today.
I love it. I love it. We got people tuning in from all around the world. How are things in your neck of the woods, Alex?
Well, it's almost afternoon here. We have a nice rain cooling off the previously high temperatures, so I'm enjoying the day so far.
Very good, very good. Yeah, we had a little rain here in Texas, some tropical summer storms. It's definitely a different experience from California, but hey, it's a lot of fun. So anyways, let's take a peek here really quickly. Thanks to earningwhispers.com for providing us with a list of upcoming earnings events, and they organize it very well. So as you guys can see here, before the open, we had CVS, we had Moderna mRNA. That's been a stock that's been obviously in the news a lot recently in regards to the coronavirus situation. After the bell, so also before the bell, we had Wayfair. That's another stock that has benefited quite significantly from the coronavirus situation. People shopping from home. That stock is up a ridiculous amount off of the March lows. And then, yeah, go ahead, Terry.
Yeah, I was going to say that one, and I know Shopify's earnings aren't on there, but basically Amazon, Shopify, Wayfair, all of those direct marketing companies, they've just obviously, you know, in this environment have just been on a boom. So
yeah,
keep an eye on those. Etsy's another one. I don't shop Etsy, but I've heard of it, and I think it's in that same category.
Yeah, it's really rather remarkable to see the performance of some of these names off of the March lows, and it just kind of all circles back to something that you were picking up at the end of last year, even in sector rotation analysis, and that is we've been in really a market of stocks as opposed to a stock market off of that March lows, with a lot of tech outperformance, which is kind of to be expected. So, but some of these other names that you wouldn't traditionally associate with a bull market environment or recovery effort, you're seeing some really interesting moves there. So after the bell Wednesday, today we've got Roku reporting. Roku, we've been tracking a rather constructive looking Elliott Wave count there. We haven't been...
and their estimate that it's supposed to lose money? Is that what I see there?
It is. 55 cents earnings per share loss.
Interesting.
Yeah. Revenue forecasted at 305 million. So I'll be watching the report. It... from a technical standpoint, we've got that pretty bullish pattern that we've been tracking as a possibility, kind of breaking through that previous resistance zone. And we haven't, in the past couple of weeks, looked at charts such as Apple and Amazon and Microsoft, and we're going to take the time to do that this morning.
Well, I know Take-Two reported blowout earnings, and I think you're going to possibly get some ride-ons. I didn't follow ATVI. Was that yesterday? I think they came out with their earnings.
Yeah, they reported.
But yeah, all of these at-home entertainment industries, people, people are subscribing or buying more video games or whatever, and when they're sitting at home, they need stuff to do. So,
absolutely.
Yeah, Roku's right among it.
Another thing I thought was interesting is they were talking on CNBC about the fact that we've seen the movie industry obviously delay a lot of key movies that were supposed to come out this year. Obviously, the Top Gun remake was something I was looking forward to, but I guess
definitely.
I know that's going to be a lot of fun. I still look forward to that one, but there's this kind of shift where they're seeing from an age demographic standpoint. More people starting to game, so as a form of entertainment. So we'll see how those trends stick around as the economy and businesses, hopefully, fingers crossed, begin to reopen as the curve flattens, or that's the hope. So other than that, this week, let's take a look at what we've got tomorrow. Tomorrow will be Thursday the 6th before the open. Wix, Chronos, which is a cannabis play. What else do we have here? Let's take a look at Thursday after the bell, and then we'll, of course, get into some charts. So Thursday after the bell, we've got Uber reporting, we've got Trade Desk, we've got Groupon, Dropbox, Datadog, Stamps.com, and, of course, Friday, you're not really going to expect anything too significant on a Friday. I tell you what, if you see a major company reporting earnings after the bell on a Friday, look out, look out. So, guys, let's jump into it really quick. Let me go ahead and bring over the Motive Wave window, and then we'll carry on from there. Motive Wave obviously being our preferred charting platform for not only Elliott Wave and Fibonacci, but really any forms of technical analysis. And hopefully, if you guys are interested in Motive Wave, you had a chance to take advantage of that summer sale. So traders, here on what is increasingly becoming our preferred Elliott Wave interpretation of the S&P, we've been noting the fact that we've seen a decrease in momentum as price action kind of begins to overlap within this particular pattern, that we're tracking here. This pattern is really kind of indicative of some sort of diagonal, whether it's an ending diagonal or leading diagonal, based on where it's unfolding in terms of this price structure off the March lows. Chances are we're looking at some sort of an ending diagonal, which is just going to be setting us up for a period of consolidation, kind of in towards the election season, which is going to be a key source, I think, of volatility and just overall market sentiment. But the big story here, obviously, as you guys can see, in terms of the S&P, going back to the February highs, we're still off of that level, and in terms of percent move for the year, it's really rather minimal. In fact, Todd,
about 3%. Yeah.
Yeah. Todd tweeted out the other day the fact that the year had opened up at a certain price level, and it had closed the other day at a certain price level. Some 8 months into the year. Obviously, we've gone a lot of places in between, but the big story being that of Nasdaq, and if you look at the Nasdaq, you can see off of its respective high here in February of this year. Looking at yesterday's close, we're just shy of 14% off of those levels. So we've essentially erased all of the damage that's been done from the coronavirus situation. So we've been watching this.
Hey,
go
Bennett,
ahead. Yeah,
I want to know when hedge fund managers are going to quit using the S&P as the benchmark and start using the Nasdaq 100.
Isn't that the case? It's you look at historically, off of like the credit crisis lows in 2009, for instance, and the overall outperformance of the Nasdaq 100 and obviously technology in general has been really rather remarkable. And certainly something they should be striving to achieve would be a return that of the NDX. So
they all brag. They all brag when they beat the S&P, and that's what they send out to their to the clients. But it's something if you can beat the Nasdaq 100 consistently year over year in a mutual fund. So
absolutely, that's not easy. Not easy to do. Not an easy task. So we've got this nice three-wave move into basically what's referred to a measured move. So we've got equality of corrective wave C as compared to A. Overall, that took us into a fourth wave zone that squared up perfectly to wave 2 of the same degree. So obviously going back to the guideline that suggests corrections of the same degree will tend towards equality, either in duration, time elapsed, or magnitude. So in this case, we have a fourth wave that squares up well in terms of magnitude. In addition, you're seeing a little bit of a guideline of alternation, and that this is, even though we've got a flat here, it's a little sharper and more directional, and this is a little more sideways in nature. And many of the top holdings of the NDX are supportive of this particular post fourth wave move that we're tracking here. And you know, simple equality of waves 5 as compared to 1, corresponding with our upper 2, 4, 3 Elliott trend channel, you'll see is, you know, potential projections for the NDX towards 12,000, which would be really rather remarkable. So let's now jump through and review a couple individual names and components of not only the NDX, but the two charts that we're going to look at here make up 40% of the XLK, which is the S&P sector spider ETF tech sector. So let's go through it. We'll take a look at Apple. Obviously, that's a name that many people have been interested in after the earnings and the move that we've seen there. So going into that March low, we've got a nice 5-wave structure which unfolds in the form of a leading expanding variety diagonal correction, an ending expanding variety diagonal. This is a C-wave position. From there, this is about as textbook of a wave count as you can get in terms of motive impulsive, clear 5-wave subdivisions. So let's go through it. Off the March low, we have an initial 1-2, which we're viewing as the minor degree structure. We then have a smaller degree 1-2 and a smaller degree 1-2. Here's your third of a third of a third. And notice in orange 3, we have a nice 5-wave move. In green 3, obviously, we have a nice 5-wave structure. Here in green wave 4, just like the NDX, we have a fourth wave correction which squares up in terms of magnitude. So the percent correction demonstrated here in wave 2 was equal to that of the correction here in wave 4. We're now pushing into kind of the upper projection zone in terms of even extensions, but really just kind of looking like possibly a 3-4 situation with still upside potential. So Apple's seen an incredible move off the lows. Another name, go ahead.
Apple announced a 4-to-1 split effective on the 24th of August. So that's going to take that $400 price tag down to $100 to make it a little bit more palatable for individual investors. Some people don't like to buy stocks when their unit price is high, but you know, that's a psychological thing because in today's world, you can buy fractional shares of just about anything. If you just want to invest $100 in Apple, you can buy $100 worth of Apple, believe it or not. So check that out, guys.
Yeah, you bring up an excellent point. At the end of the day, in terms of the market cap and, you know, what you're paying and with fractional shares, you know, whether it was a good idea or not, we'll see how it unfolds. It's kind of interesting the way that the reflection of the split takes place in traders' accounts or investors' accounts versus when they're actually going to start trading at that reversed split price. I think there's like about a 5-day difference there. So don't look at Apple when it drops into the 100 range and think, oh man, it's time to go all in on Apple. It used to be 400, now it's 100. So
well, that's what's going to happen. There'll be those people who weren't paying that much attention to the market and said, oh, it's a bargain.
Yep. It must have gapped down because they dropped Intel. I don't know. Just kidding.
Watch out for that, guys.
So guys, moving on, let's take a look from Apple. Let's go ahead and jump over to Microsoft. And I was working a wave count here. We've got a little bit of a weird third wave structure. Totally valid, however. If I get you off the daily, I'm going to take you over to a 195-minute chart. And opposed to a 240-minute chart, a 195-minute is exactly a half day. So we're basically looking at a half-day chart. So half-day candles, twice the amount of candles that you would see on a daily chart off of that March low. So what we've got here is a little 1-2, 1-2, 1-2, 1-2. I'd actually move this here and call this a little bit of an expanded 3-wave structure. Got a nice 5-wave move here, sideways triangulation in the form of a 4th wave, another 3-4, 3-4, green wave 3 took us to that upside 1.618 multiple of wave 1. We then, once again, just like I showed you guys in Apple, just like I showed you in the Nasdaq 100, a 3-wave correction in a 4th wave position that squares up perfectly to the wave 2 of the same degree. So you'll see here squaring up would have been 197.44, and the actual low in that 4th wave was 200.20, so very close. Sorry, the low was 197.51, 7 cents away from that equality level. Always love to see these fib levels hold and act as support or resistance depending on what you're working. So also a measured move. We've also have equality of CNA. Now we're pressing higher. Could this be some sort of ongoing 4th wave, and this price action here is some sort of a B wave structure? Certainly a possibility, but implications remain the same, that being that we should see a 5th wave with some pretty good upside implications.
Now that gap, that price gap up and is set in an island there. So we want to see whether that's going to be an island reversal, or is that going to be a continuation? So let's keep a close eye on Microsoft over the next several trading days.
Absolutely, good eye, good catch there on Microsoft.
Yeah, I just put upper and lower bounds on that island right there as resistance markers. If you guys like to set yourself alerts and stuff in your platforms, you can check into that, and that'd be a trigger point for me to make a decision in short term trading.
Just watching Activision fading a little bit here again before the open. So, all right, let's go on now and let's take a look at AMD. So AMD's had a remarkable run off of the earnings report so far, and what we've got here is, going back to October. This is where we were suggesting this 3-wave structure had bullish implications for 3rd wave projections towards 60. We're now trading the 85 handle, so it looks like we're going to be on our way towards that 100 handle a lot sooner than expected. And obviously our 3rd wave 1618 extensions up at 137. So I remain bullish on AMD.
We passed through the 100%, so that's so pull that 100% 3v1 target down. That's our first indication. You can see we just penetrated that, and we penetrated it substantially. I mean, it wasn't a hesitant move, right? It was a clear-cut move to the upside above that 100%. So
yeah, there was some
our
conviction.
Our next target on that's going to be the 1618.
Yep, definitely. There was, and to Terry's point, excuse me, there was certainly some conviction in that breakthrough equality. You guys can even see the importance of that price level. Just looking at these are weekly bars that we're looking at here, and I just drew 2 lines that kind of intersect with what was equality. And we were met with a period of consolidation as we kind of contested that zone and eventually broke through it. We had the fundamental follow through with earnings. We've been tooting the horn of AMD from a fundamental standpoint for quite some time, and it remains to be one of our favorite semiconductor stocks. So Amazon, let's jump over to Amazon and then we'll carry on. So Amazon, we came out with a revised possible Elliott Wave count in terms of a 4th wave position. What we've got here is another situation where off of the March low, you've got a 4th wave measured move where we've got a 3-wave swing. This took us into equality of CNA. This actually was an overall 38.2% retracement of the 3rd wave, which is another very common 4th wave fib target. Notice in this particular Elliott Wave count, we have a 3rd wave that is just short of that wave 1. So what does that tell us? A lot of people think that your wave 3 in an impulse has to be the longest. That's not true. Your wave 3 just cannot be the shortest wave. It can be the medium length wave. So what does that mean? Well, simply put, the 3rd wave is shorter than wave 1, so wave 5 needs to be shorter than wave 3. So if I were to just come over here and take a look at our 5v3 ratio comparison, you'll see that doesn't come in until 4,280 for Amazon. and we also have a pretty good zone around 36 to 3,800. So we're watching this, possibly still an ongoing fourth wave, kind of similar to what we saw there in Microsoft, and a gap out of this possible fourth wave zone. But overall, price action looks rather constructive there for continuation. All right, guys, we've had some move in gold. Gold broke through 2,000. We've also seen some movements in cryptocurrency. So, guys, I'm going to leave this up to you. Do you want to jump in first, Terry, or should we?
Sure, no. Let Alex. Let's go ahead and talk gold.
All right.
And then I'll wrap it up.
All right. Let's go ahead and make Alex presenter. If I can see across the office to the desk with that monitor, I think we should be good. So, Alex, sir, when you are ready, the screen's coming at you.
Sure. Just tell me, is the right screen on? Because I think I clicked.
Yeah,
this is your gold.
Okay.
Yeah.
Okay.
Yeah. Hello, traders and members. Yeah, gold has been the subject of many news all from the media and from in the trading community. So we have been long gold for some time now, and we had several wave counts, but from the last I think month or two, we are kind of looking for extensive move up in gold to continue. Okay, so on our data provider, we don't have such a long period of gold data. Okay, so I will just present you here this wave count, and then I will show you a little bit more data on trading view. And if you look here, we have we can easily construct this as an ABC, triangle X ABC, just missing 61.8%, which is a usual kind of a stopping point when you have a correction while you have a triangle in X. Okay, so after we have a nice 5 waves, then we have a flat for wave 2, and now we are starting a progression. And obviously, when you see, and if you study an Elliott Wave work, you will see that the wave third of a third, where we are now, should be almost vertical and almost 90 degrees. So we are seeing that verticality here present now. So most probably we are in a wave which we usually call third of a third, which means that it is a part between the second wave correction and the third wave of the higher degree. And the verticality suggests that we'll have a little bit more upside before we start to do some type of a fourth wave pullback and then a fifth wave continuation, which kinds of agrees with our dollar wave count, which I will show you also. So for now, we stay bullish on gold. Possibly we are going to be in front of a bumpy road, because after some times, by reaching 2,300, maybe 2,200, in that area, we're going to see some type of let's say a little bit more larger corrective pullback. But bear in mind, usually when you have such a breakups and on historical highs, this previous high from 2011, so these levels will now serve as a potential support. So I see this support holding in potential two scenarios. So if we have this wave 3, 4 up in 5 to conclude this orange wave 3, and then we might have another pullback to these support levels. Maybe it's going to be triangle. I cannot predict that, but I'm just kind of throwing to you a hypothesis according to the current development. So because we know this cannot go to 10,000 immediately, it has to do some legs. Even if it wants to go even higher, then this will be a wave 1 and we'll have a pullback in wave 2, and then we will continue. Depends. We don't know that yet. So we are going to deal with this first sequence. And what is first sequence is telling us that we are going to start to do 3, 4 up in 5, and then another larger, potentially fourth wave, which also might find support here. So a larger wave count from 2000, because they don't have a rest of the data to allow me to do the whole chart. I have some charts from 1930s, but we will maybe present them in one of these live shows. Okay, so here from this 2000, you can see a 5 waves up pullback in a wave 2, and then if you start to count waves, you can see that you have a move up in a wave 1, down in 2, and then you have a 5 waves in the subsequent wave 3, pullback in a wave 4, and the 5 waves up in a wave 3. Okay, so this was only a fourth wave pullback pairing to this wave 2. So this is the final sequence either of the further bull run, but when this fifth wave is finished, we're going to see some correction or a further move lower, or just a corrective pullback and then a further continuation on the upside. So according to this, just throwing some measurements here, and we can do that now on this chart because we have this correction here. So we can kind of just throw some of the usual levels. We look from the Fibonacci. So we are around 1618 is at 2740, and 200 comes a little bit more upside around 3,500. Okay, so I will be looking first more conservatively to this first target. So most probably, what I did, I just put the retracement tool and extend it on the upside. So we use different kind of fib ratios to find the Fibonacci cluster. And then these clusters usually present a very, very strong resistance where we usually see that some type of a correction is starting. Okay.
It's been 11 years since we've seen gold at these price levels, so everybody's getting really interested in what's going on. Could we see $3,000 gold? I certainly think so, right? So,
yeah, well, I mean, the environment is like that. We are in a COVID crisis. Governments are printing fiat money all around. We have a different fiscal also help. So in this type of devaluation, gold is definitely one of the things you want to have. And that this definitely interest rates are not going to go up, but we might have an inflation up because of this stimulus. So from the several sides, you have the environment, which is kind of a good for a gold uprise, and this is exactly what we see. So just to sum it up for gold, we don't think that the move up is over. We are seeing maybe around 2,200 levels, some 3-4 starting. So we will have some type of a longer term sideways, but we will have one more push potentially after this 4 and support hold, another move up to this 2,600 level. And this kind of pairs up with the first initial sequence in dollar index. So I'm going to show you silver as well. So silver is, I show you the silver gold ratio. So silver, I definitely think it's going to outperform gold. And on silver, we are seeing also a nice Elliott Wave extension on the upside. RSI is pretty above 70, but as you know, and if you have some experience, the RSI can stay in this area for some time before we see a move lower. So I see silver a little bit more upside. So from this level, so a little bit higher, I would probably look for a pullback in a blue wave 4, because we have here wave 1, 2, and then we have a subdivisions, 1, 2, 3, 4. This is a very nice small triangle which occurred on a smaller time frame, which you can see here. There is a wave down in A, up in B, C, D, and E. So this is the triangle which actually tell us that we have one more move on the upside. So we just need to track how big this move on the upside will be. 38.2% 5 versus true 1 to 3 is around 30, and a little bit more 2618 is 32.24. So I guess we will see a little bit more upside before a larger correction comes. Final push up, and then I think we're going to see a bigger pullback and a kind of a rest, because whatever you have such a strong moves, the assets class needs to take a breather, you know, some type of a consolidation, either sideways or a more directional will take place, and then we are ready to take a new move in the direction of the current trend. So let's see some of the other things that we are track. This is our dollar index chart, and this is what I was telling in regards of this. I see dollars still didn't finish the move down. So I have changed a bit. I don't know if I presented that last time, but I see this as a 1-2, and then I see 1, 2, 3, 4, 5, perfectly reaching 1618. So this is a usual place for the green wave 3 projection. And then I think we're going to have some time of a consolidation, probably in a triangle, because this wave 2 was taking some time, and this wave 2 equality will give us around September, and maybe even we go to the half of the September if this triangle starts to go to be more durable in a sense of time. So it might take us to 1618, but 100% is maybe beginning of September. So I'm expecting dollar index to start, and euro consequently, to start some type of a triangulation before we see a final push down in wave 5, and then we can expect a corrective pullback in metals and other asset classes, probably in stocks, probably in oil, while the dollar is climbing to these resistance levels. And then I see at least one more push down in dollar index in a month or weeks after this correction is finished. But we are already talking the end of this year. I will just show you shortly euro. Euro is of course resembling this wave count on the dollar index. So this is a wave 1 and 2. Up in 3, I expect some type of a consolidation, flat, triangle, complex, whatever. And then I expect one more move up in the region of 120, 122 before we take a move lower for a bigger correction for the wave 2 or the wave B. So as you can see, we are tracking extensively these wave counts, which are now unfolding quite nicely. And let me show you just a Bitcoin. So we also expect some type of pullback in a Bitcoin. We have seen a triangle measurement reached. Also, some strong fib ratios are there. So we are looking for some potential weakness in cryptos before we potentially start a new trend on the upside. So that's my, as they say, 2 cents.
Very good.
That's our digital gold, Alex.
Yeah. Digital gold, yeah.
Absolutely. And
Actually,
hey, guys,
I kind of like Ethereum better than Bitcoin, but we'll leave that for our blockchain members, and we'll discuss more about that.
Yeah, but I mean, I will not agree. I mean, digital gold is a bit, you know, when you have something which is limited in production, and you can call everything digital gold when you have this type of environment, like in cryptos. You know, there is a few like a 2 million left, and then you can also name it as a digital gold because it cannot be produced over the quantity there is. So it's just a matter of labeling the scarcity, like in gold. So I more see cryptos as a yield because we are going to live in a world where the interest rate is going to stay for a long time in a zero bound. We're going to see a yield curve controls across, so people will seek yields, and one of the vehicles that can transpire will be cryptos. And as you said, Ethereum is becoming a platform for many other cryptos and altcoins and many other applications. So Ethereum is also starting to be very popular for a long. We are facing a strong resistance here in Ethereum very soon. So I'm also looking for a pullback in Ethereum because this channel trend line, which are usually compass corrections, are still holding its highs, and I don't think we're gonna see an attempt of a breakout further on the upside. I more see a little bit of breather, you know, like a strong athletic man is running for a few miles. He has to take a
Needs a
rest.
rest. Yeah.
It's the same. So it's the same with this one. I think we will take a little bit of breather and then continue on the upside.
Hey guys! Before we go on, did you catch the news article about the 17-year-old that was, I guess, the leader in the Twitter hack, the Bitcoin Twitter hack? I don't know if you guys heard about that.
No,
They hacked.
17-year-old.
They hacked. I think, I don't know if it was Elon, but there were several key names like Elon
Several,
Musk of the
several.
world. And the tweet was, "I'm giving back. Whatever you send me in Bitcoin, I'll send you back."
Oh yeah,
Oh,
I
yeah,
remember
yeah.
that. It was,
Well,
it was 2 weeks ago. Yeah.
the 17-year-old kid who was one of the 3 that were involved has 300 Bitcoins. Not only does he have 300
God.
Bitcoins, there was another case before where they confiscated 400 of his Bitcoins and they gave back 300. And so in this case, the judge is trying to say they're stolen. His attorney's trying to say, well, what else legitimizes the cryptocurrency more than the courts giving him back the 300 crypto in the last case? So my goodness, it is going to be interesting. So anyways, I didn't mean to take us off track, but it was interesting.
No problem. Looks like we've got market open here in about 5 minutes. Guys, this is sector rotation using the Optima platform. 2 days here in performance this week is over here on the left. This is, you can see energy actually kind of jumped up about 2.5%, but here's technology too, right? So technology also making big moves this week. What we got over here on the right is the S&P. This green rectangle represents the entire month of July. So we had about a 5.5% move higher in July. June was not as good, but July we've recovered and gone certainly past that. And now these first couple of days here in August, is this market never going to roll over? So it just continues to impress us. Now, most of the month of July, the technology was much more volatile than the S&P. While we saw the S&P push on up here and make a small consolidation, we saw a huge consolidation mid-month in the Nasdaq, and that brought us a little bit of concerns that yeah, the Nasdaq's taking a bit of a larger breather than the S&P. However, at the end of the month, Nasdaq was still up 7.5%, outperforming the S&P. Let's take a look at our weekly rotation here. Actually, we've got a new month. Let's jump over and look at the monthly first. So if you're long-term investors, you might want to use this monthly rotation, picking the sectors that you want to remain invested in. Look for those sectors that are in this leading quadrant to be long-term buy and hold stocks, and certainly technology just continues to increase its relative strength performance. A little bit of momentum decay here. Certainly the slope here indicates further improvement in technology ahead of all of these other sectors. Shortly behind technology was healthcare. The healthcare, and remember, we're benchmarking all of this against the S&P. So the S&P is at the midpoint of these coordinates here. So if you want to perform the same as the S&P, buy something that's right here. If you want to outperform the S&P, you need to be buying stuff that's further to the right in terms of relative strength. And certainly we can clearly see that with the Nasdaq's outperformance of the overall S&P, which is mostly tech heavy laden. Here we have communications. Communications is pushing into the leading quadrant, continuing to increase momentum, continuing to increase its relative strength position. Healthcare, yeah, in the monthly, healthcare is still kind of gaining a little bit, but it's lost a bit of its momentum in the last month or so. It's kind of turned. What's also interesting is I see this reversal hook here in discretionary. So discretionary, and on the monthly, everything is, most of these are performing similarly. What's underperforming, what has been underperforming the S&P, and looks like it's going to continue to underperform the S&P heavily, is real estate, materials, industrials, and financials. Although we've been noticing materials on this monthly, we've been noticing quite a sharp run up in momentum in the materials sector, and I think most of that is in the petrochemical stocks that I've seen. A little bit in mining, Newmont mining, and such. Financials, nowhere to go but Southwest. And poor old energy. Yeah, it's going to take years for energy to get back into any kind of lead in this monthly. Let me go back to our weekly. So our weekly rotation is more about what we tend to look at when we're doing swing trades, so shorter term trades. And in our weekly rotation here, we only have technology. Well, technology's in the weakening quadrant, but another thing notice here is look at what we've just now seen. We've seen this reversal hook, so potentially indicating that the decline in technology is about to end, and technology may actually reverse and come back up here into this leading quadrant in this weekly time frame. Discretionary just losing momentum, but still holding very strong relative strength. Communication weakening a bit to materials here, but all four of these are to the right of this 100%. They're outperforming the S&P. They're going to continue to do so in the near term. And I'll just animate that little rotation for you there to give you an idea. Let's take it back to the end of May. And this elliptical area here is a 2 standard filter deviation of movement, and it goes from being a circle to an ellipse depending upon whether the S&P's momentum or relative strength performance is shifting. And so that's why you can kind of see it expand to a large circle right there. But take note of how fast that we see healthcare and staples and utilities exit the picture here. They did make some hooks here, and I talked about that a couple of weeks ago. But healthcare continued to push on over into the lagging quadrant, and healthcare, staples, real estate, utilities all lagging. Energy, financials, industrials are improving, but they've lost their momentum push too also. So a lot of loss in momentum. I'm seeing the reversal in momentum here in technology. In tech stocks, we'll take a look at the top 20 by market cap in the XLK. And again, what we're looking for here is anything over to the right. So kind of plotted the S&P in here as the midpoint there. And you can kind of see about 2/3 of these stocks in this sector are running ahead of the S&P in terms of relative strength, and then about this other 1/3 here is running somewhat below it, although not too far below. Most of this stuff is centered right here. There are a few outliers. Intel, poor earnings. Intel, bad guidance, I guess, and competition with the 7 nanometer chip performance and stuff. Intel is continuing to push out of favor in our investing horizon. Texas Instruments, though, has actually jumped up here into the lead. And we haven't pulled a plot of this, Bennett. We've been looking at AMD and some other semiconductors, Taiwan Semiconductor, namely, I think. But Texas Instruments looks like it deserves a little bit of a look there. And then here's Microsoft. Microsoft's finally made a hook. And Microsoft looking to acquire a TikTok might be a positive thing for that company to enhance its social media performance. We're seeing Adobe drop down into the weakening. Salesforce.com had been dropping, and it's now forming a hook. So anytime we see these hooks, you could see a reversal of performance in these guys and have them return back to limelight. I always like to take a look at the semiconductor subgroup of the XLK, and here like 80% of these stocks, and this is not all the semis, this is again just a kind of a top 20 or so list, 80% of semis are just outperforming like crazy. So, you know, keep hold of semiconductor stocks in your portfolio. Unless you're holding Intel, you should have bailed on Intel if you were listening to me a month or so ago. I started beating on the whistle when I saw Intel pushing lower and lower, and certainly right here by 1st of July, Intel is not coming back. Intel is pushing into the lagging quadrant. AMD actually hooked right here a week or so ago. The AMD actually looks like it's going to rotate right back up, and bam, there goes AMD. So AMD and Intel disassociated themselves from this downtrend that they were both paralleling a downtrend early July. Now AMD is pushing back up with the rest of the group.
Yeah, Intel looks like it's ready to set up for another one of its classic multi-year consolidation patterns. So,
yeah. All right, let's look in consumer discretionary. My favorite stocks here: Amazon, eBay, and Lowe's, all with very high relative strength performance. Even Home Depot, Lowe's, Home Depot, they provide basically the same service, and I prefer Lowe's. But if I go shopping, I go to either one, whoever has the product. But from an investment performance, Lowe's is outperforming Home Depot. Home Depot is outperforming the S&P, but Lowe's is doing a little bit better job of that. Let's take a look here at communications. So Take-Two. So Take-Two did, let's see, which one of these is Take-Two? This one here, yeah, this blue one. So Take-Two reported earnings, I believe, was it yesterday or the day before? And blowout earnings. I really expect a lot of the stocks in this particular group. EA, here's Electronic Arts, here's ATVI, Netflix. All of these guys are hooking. I think you're going to see exceptional earnings reports if you haven't already out of these stocks. They're going to stay. These stocks are going to continue to stay in a leading position, while the XLC is actually doing a bit of declining into the weakening. It's weakening a little bit against the S&P, but there's still a good subset of stocks here to hold on to. T-Mobile and Sprint merger is complete, and T-Mobile's weakening a bit, but still good to hold on. Several of these broadcast companies and cable companies, I think, internet providers and stuff, they're trying to make a comeback here. Comcast, somewhere on here is Viacom, CBS Viacom. Man, this one, look at the path that this stock had. I think the merger happened somewhere back here. I don't remember exactly when that merger was finalized, but CBS and Viacom. But certainly Viacom's very lagging performance, pushing heavily up into the improving quadrant. Now suddenly Viacom is taking the lead. This is one stock I have not even looked at in terms of price performance. Let's look at a weekly chart, and you can probably see why. Here's a weekly chart of Viacom. There's just been too many other stocks that are outperforming their highs for me to keep get real interested in this. But if you happen to invest in this down here in the lows. This stock's been on a pretty good run, right? So a little bit of overlap there, but this certainly looks like an impulsive move, maybe a 1, 2, 3, 4 consolidation, maybe over right here. And maybe we're setting up another 1, 2, 3, 4, 5, and we're going to see continued performance out of Viacom. Let's look here at our materials sector. And materials sector, it's been Freeport outperforming Newmont Mining, but a lot of these petrochemical stocks and industrial gas stocks have been pushing further to the right. As a whole, 50-50 really outperformance. So in the long term, materials is still kind of over here lagging or in the improving quadrant, but in this near term, there's a few stocks in here. In this material subgroup, we had a lot of interest in gold. Obviously, gold shooting to new all-time highs and potentially going higher. Silver to gold ratio, silver actually outperforming gold, as Alex showed you there. And we went through this a couple of weeks ago where I filtered all these out. This collective group of stocks that are moving higher, I think, have mostly have more weight in silver production than they do in gold. And then we had a lot of these stocks that were moving to the southwest here, following Newmont Mining, which is one of our big leaders. A lot of these stocks are more gold related, but certainly look at the hooks happening here. And I think you're going to see a lot of these stocks return, probably as we see gold continue to push higher. A lot of these gold miner stocks right here are going to push themselves right back out of this weakening quadrant. And looking at nearly everything in here pointing back towards the leading quadrant. It's a very scary picture to me. I don't think I've ever seen everything pointing to the leading quadrant in such a large group there. But yeah, you almost can't go wrong buying into this. So outperformance, you're going to see, here's your list by relative strength ratio. You can take a screenshot of that if you want to. So now getting into the underperformers, healthcare is still technically an outperformer. Certain stocks, yes. Of a lot of stocks, no. So the world is still waiting on the announcement of a viable vaccine for this COVID pandemic that's going to clear everything up. And until such time as that actually happens, I don't think you're going to see any clear winners out of these pharmaceutical stocks. Matter of fact, I think I heard that the administration is looking at discussions with a lot of these pharmaceutical companies on price controls and price adjustments that may actually reduce their earnings, their profit margins significantly, and bring the cost of drugs down in the United States. So that won't be a positive thing for any of these companies. It is not for their earnings, to say. So industrials, I don't really like much in industrials except for a couple of the transports like UPS and FedEx that are really outperforming here. Caterpillar, John Deere starting to break over here into this. This is the XTN, the transports ETF. I pulled this up, I think, for one of my subscribers, and this is much longer than the 20 list. So it's a very convoluted list of stocks. But you know, some of these shipping companies here, Atlas Air. Look how strong this guy here is. That's crazy. Not even on my radar. Look at this price chart. Look at this performance ever since the March lows. Wow, I think this one's outperformed the Nasdaq 100. What do you think, Bennett? It's gone from 16 to 55. So yeah, it's a market of stocks, guys. If you take the time to invest in screening and looking for high performers, you don't have to just sit back and buy the S&P and make 0% when the market and just endure all this stress. You got to put a little bit of effort into it. You can find stocks out there to invest in and make a little bit of money. Staples, don't really like much in staples, and real estate, utilities, everything in the lagging quadrant. Financials. Only one that I really kind of focused on there is Morgan Stanley is sitting over here in the lead, S&P Global, and BlackRock, but not a lot there. Here's energy, and then we're going to wrap it up here. Energy, a lot of stuff improving. A lot of these shale producers are holding their own now that the price of oil is floating around the $40 a barrel mark. If oil goes south again, you're going to see these drop out of performance. Nobody in the lead right now. Everybody's hanging on, and I really think all these oil companies they need to see $50-$60 oil to start moving themselves back up in here into an investable pattern. So I'm going to leave it there, Bennett, and if you guys want some more of this, join our Premier service, and I do provide a weekly sector rotation analysis study, and we talk about this also with our members on our member webinar. So I go into more detail. I have a lot of different things that I can do with this Optima platform.
Thank you, Terry. Much appreciated. And thank you guys all for tuning in this morning. Hey, if you guys enjoyed the content, please be sure to give it a like, good old thumbs up for YouTube to know that you're enjoying it. Helps the algorithm distribute the content to the right viewers accordingly. And of course, subscribe and turn on notifications to get notified the next time we do go live. And I would also ask that you guys subscribe to our Trading Analysis YouTube channel as well. So Terry, Alex, thank you guys so much once again, members. We'll be seeing you in about 17 minutes. We've got our member webinar coming up here, and we'll be keeping our eyes on the markets as well as those earnings reports that we discussed for after the close today as well as tomorrow. And guys, if you're interested in more of what we do, you can check us out at tradinganalysis.com, stock options, Forex, and cryptocurrencies. Thank you so much for tuning in, and we'll see you guys all next week. Terry, Alex, thank you guys. Be safe, stay healthy. We'll catch you guys on next Wednesday stream. Take care.